All right, everyone, here we are with ticker symbol NIO, NEO Inc. Before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. So all my subscribers, welcome back, and let's jump into this chart. So NEO had a bullish run. It reached highs here of 2025 in the last couple of days, and before that, it had seen highs after reaching close to $20, $21 and some change. And since then, it dipped, leveled off, and here we had a strong recovery at $20 and some change. So we missed it by almost $1 to reach these highs again. But this was the highest point in the last couple of days, and we've had a bearish run since. The bears have dominating this, and they brought it to lows of $18.04. The bulls reappeared, used support, and then they started to work their way up. Broke through the 50-day moving average, used it as support as well, and closed off at 1923. So a lot of volatility here within this reaction between the bears bringing it down and the bulls recovering. But the bulls have some work to do to continue this momentum. So we're going to go ahead and look at what's important for tomorrow. We're going to do this zoomed in, and then we're going to zoom out a little bit because this resistance level from yesterday to today, 1954, is still important. I write that down. Don't forget that number, 1954. And now let's move this to their new locations, their new resistance levels and support. Now, the lowest point that this reached is literally the next support level after our support level that we're going to look at zoomed in. So I'm going to give that number as well. Very important. Write it down and don't forget it as well for tomorrow and the next coming days. 1805. 1805 is the lowest point that's reached in this run and within this time frame and the last couple of days, and it's the deepest it's gone from below the 50-day moving average into bearish territory. So 1805, very significant. But before worrying about that, the first support level that needs to be broken through is 1876. If the bears are able to break through the 50-day moving average of 1908, I'd write that down as well. If they're able to break through that and start to work their way down into bearish territory and break through support, which is 1876, this will start to reach newer lows, test new lows, and start to break through new support levels. So very, very important that 1876 is a point to pay very close attention to if it is broken through, because the bears have accomplished two things. They broke through the 50-day moving average and they broke through support. And now we're in bearish territory by that point, further away from the 50-day moving average in a downward direction. So 1876 is our support level to pay very close attention to. On the other end of things, we have the first resistance level, and this resistance level needs to be broken through. I want to emphasize that, needs to be broken through by the bulls to work their way up further away from the 50-day moving average 1908 in an upward direction, turn this resistance level into a support so they can start to work their way up to newer highs, to then break through 1954, which is the next resistance level, so that this can start to work its way up to new resistance levels and see newer highs in an upward direction. But before getting there, 1932 needs to be broken through by the bulls so that the 50-day moving average does not catch up to them and get them into bearish territory, and so the bulls can continue this momentum. Turn 1932 into a support and start to work their way up. As always, if you feel inclined or encouraged to subscribe and you found this video helpful and informative, please do so. But don't forget to click on the bell by turning on all notifications so that you guys don't miss a single video that I post. Share this with your friends and community. And thank you guys so much for watching this video. And don't forget to hit the like button and let me know you watch this video. Let's make some money.